Okay, so Jonathan Ruiz, your accounting coach, survival tips. So today, it's very important discussion again. But before that, I would like to thank you for following my Instagram at CPA Dreams and sharing and liking my accounting coach survival tips CPA Dreams page. So thank you so much. And of course, if you have families and friends that you think that this will help, this mini video series can help them, or they are taking senior high school K to 12 basic education curriculum, ABM specialized subject, accountancy, business, and management. So please share it to them or tag them, tell them that I'm doing a mini video series. And then, of course, this video series is the main foundation of accounting. If you are planning to take the Bachelor of Science in Accountancy or already taking the Accounting 101 subject, this will help you. Okay, so moving on, our topic or our agenda is business transactions and source documents. We are going to learn what is business transactions and its qualifications, how to qualify a business transactions. And then, what are the types of business transactions? I'm going to give some samples. And then, types of business documents or source documents. Now, what is a business transaction? Business transaction is an activity or event that can be measured in terms of money, which affects the financial position or operations of the business entity. So this means that there is an effect on the accounting equation or on the elements or major types of accounts, which is assets, liabilities, capital, income, or revenue and expense, meaning it will have an impact on the business. Okay, so how do you qualify a business transactions? So there are 5 criteria. This, you need to really remember this. First, a transaction should be involving the business entity. Here, the concept of accounting entity. Remember that the entity, there is a separation from personal and business transactions. So there is a distinction. So if the owner is using the business for his personal use, so then that is not part of the business transactions itself. For example, the owner bought a car for his own personal use, then it is not a business transaction, it is a non-business transaction. So then another qualification is of financial character. Dito papasok yung monetary principle, or it should be in a certain amount of money, or it should be measurable and there is a peso equivalent. Next, third is a dual or twofold effect on the accounting elements. As I have said, it should have an effect on the accounting equation, assets equals liabilities plus capital. If there's an increase in asset, there is a corresponding increase in the liability and equity side. Next, be supported by a source or business document. You cannot make any entries without any supporting documentations. This is also applicable in real life, so you need to remember this one. And then the last, it can be journalized. So meaning you have an entry of debit and credit. Okay, it should be entered in the journal. Okay, so what are non-business transactions? Non-business transactions, these are those that are not or missing one of the qualification of a business transactions. Okay, so what you need to do is remember those 5 qualifications. Now, sample of types of business transactions. If you are purchasing goods, materials, and services for the business, so meaning you purchase a good, so there will be an entry on your inventory. If you are purchasing it for cash, then there will be a decrease in cash. Then sales, cash sales or credit sales. Then paying wages and salaries or purchase of non-current assets. or raising finance and paying the suppliers, or accounting and paying tax. So these are some samples of business transactions, meaning they will have an impact on the 5 major types of accounts. Remember, I discussed in the previous mini video lessons the assets. It will have an impact on the assets. For example, purchasing of goods, like what I have said, so it goes on inventory. So there's an increase in cash. If it is on account or on credit, then you have a corresponding effect on the liability. So there is an increase on accounts payable. Capital, if the owner, for example, invested a specific amount of money on your business, then the capital increase and then your asset increase. If it is in cash, then the entry will be debit in cash, credit owner's capital. Of course, if you made sale, there will be revenues, meaning there will be an increase on your asset. If it is on cash, then increase in cash. If it is on account, then increase on accounts receivable. Then you have also expenses. There will be a disbursement. So meaning it could decrease your assets or it can increase your liabilities. Okay, again, they have an impact on the 5 major types of accounts or accounting elements. Now, of course, you cannot identify a business transactions if you don't have any source documents. So what is a source documents? They are the physical basis upon which business transactions are recorded. So meaning source documents should be retained as an evidence of those business transactions. Why? Because if the company will do a financial statements audit, they need to verify all the business transactions if in fact they have occurred or they exist. Okay? So what are the types of business or source documents? Cash memo, invoice, payslip, check, debit note, credit note, vouchers, and bill. So these are 8 types that I picked as a source of business documents. Now, let's take a look on the illustration or example of these source documents. For cash memo, so here you can see this is the sample of cash memo. It can be sales or purchases, the main pictures, for recording cash sales, for recording cash purchases. Cash memos are used by the companies as a source documents. Okay. Then we have the invoice. Actually, it can be here in this presentation, I use it as a sales invoice. The bill is the supplier's invoice. Okay, so this is the sample type of the invoice. So the main use of this is if you make sales. And then we have the pay slip, of course. This is very important if you are a working student, so meaning you are receiving this pay slip. Okay, your pay every month. Okay, your paycheck you will receive and you will have the breakdown from the pay slip. Then you have the check. Of course, check can be issued to the supplier, can be issued can be received from the customer, or can be issued to you after receiving your pay slip. Okay, so check, you need to encash it. Then we have other types like what I've said, the bill here, I'm referring to supplier's invoice. Okay, there will be a supplier name, same as in the same format of the sales invoice. But here the difference is it is on the side of the supplier. Then debit note. This debit note is also another documents that usually you are going to use if there is any return of your from your side, okay, when you make sales. Then credit note, this is on the side of the supplier. You will receive a credit note if you return something to the supplier. Okay. Then this is the accounting voucher. There are what we call receipt voucher when you receive cash from your customers, or it could be a payment voucher when you pay your supplier. So again, what we have learned today, we learned the qualifications and definition of business transactions. I have shown some sample of business transactions and samples of source or business documents. Again, thank you so much. Please continue to like and share our FB page. As I have promised, you can get the transcript of the videos, the explanation and the PowerPoint. If you go to the description on this video, you can see this HTTP, okay, the red mark, which is the sign-in link. If you sign in on this link, you will receive the PowerPoint and transcript of all the videos that I shared. Okay? So mabuhay po kayo. Maraming salamat. Accounting Coach, Survival Tips, Jonathan Ruiz.